I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I got a jam-packed show, man. Hey, John Grace is going to be with us here today. He's founder and president of Investors Advantage Corp, where we're going to be talking about the Fed, okay? They're holding their rates steady right here, but are they keeping the door open for future cuts? We're going to be talking with John about that and see how it affects you if that's the case. Plus, Don and I, hey, we're keeping towers, and we have REITs on our list here today. All right, some are resting here, and some are making 52-week highs. You're not going to want to miss any of that. So we got guests, stocks, and a whole lot more. Stay tuned. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, the great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
There's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Hi, I'm Steve Forbes. You're watching Traders Nation.
Don, you can hear the difference. All right?
That's it.
You can hear the difference. Really? Towers, Don. Here we are. Unbelievable. Don, I sure hope folks have been watching and listening Traders Nation. We got some longtime viewers and listeners, but really, I hope they put this stuff down. Scratch it down. I mean, look at these towers, Don. AMT, American Tower, currently trading at $217.66 here today, Don. 266,000 shares exchanging hands on this one, up $7, Don. All right, resting right here while it's creating another 52-week high. All right. In fact, Don, give us a 411 on this.
A lot of stocks go up, and some come, crashing back down as they get sells and people take profits. These are three companies actually we're focused on, where this industry, the tower business, is growing and continuing growth. Now, there has been a slowdown in the wireless cell phone business, but however, having said that, the 5G business is being rolled out by two major companies across the U.S. They'll all roll them out, and then, of course, that'll be a worldwide product as well. Of course, there's an argument to be said that Europe's rolling out 5G faster than we are. But somebody's got to carry the traffic, and here they are. American Tower, just about back at a 52-week high. We're going to move on and talk about SBAC. That's out of Boca Raton. Now, this is another company, just about 52-week high, and then we come to Crown Castle, the Texas-based company. These three tower companies, where the barrier of entry to this business is not easy, are all consolidating here, all up around 52-week highs.
Yeah, totally they are. Certainly AMT, once again, American Tower, currently trading $217.66 here today, $217.66, up $7, like I said, and resting right here as it creates that new 52-week high. Again, Don. So, Don, listen, we got to touch a little bit about this. So we've been telling folks about how these are creating new 52-week highs, and everyone's like, "Hey, man, I want to jump in. It said it's at a high. I'll wait till lower." Well, that wait till lower hasn't been coming yet on these, right?
Well, about a month or 6 weeks back, they were beat up one day, and as I talked about there on the show, I said, "Look, this is insane because these companies aren't going anywhere." Once again, I drop back to barrier of entry into the business. These companies will either be acquired or they're going to be doing the acquiring, as American Tower just did with a pretty good-sized deal over in Africa.
Yeah.
And, of course, on a worldwide basis, American Tower is the one you want to keep an eye on because they're the one that's all over the world. SBAC is focused on South America. Crown Castle, on the other hand, is focused domestic U.S. only.
Yeah. Yeah, and there you have it. Let's talk about Crown Castle CCI. That's next on our list on Charlie International's Crown Castle International Phonics for that ticker. Currently trading at $136.93 here, Don, up $4. Up $4
yep.
Since it broke that channel, that resistance to the upside. I love the channel on this one, Don. And if you let's bring the charts up for everyone so they can take a look at that. Broke above that channel. That resistance in that channel now becomes that new support level, currently trading at 136.93, Don. It's recovering nicely from that dividend, which was the other day, as it creates this 52-week high. That dividend was a $1.12.5. That was back on 6/13, Don.
Well, American Tower and CCI, both they're REITs and they pay dividends. SBAC is a REIT, not currently paying a dividend. However, there is also an argument going on right now in the trade where they're saying 5G is going to slow this business down because it'll have an effect on the major carriers here in the U.S. I don't think that's a great argument for these towers companies because the 5G will simply make these companies roll out small cell towers more rapidly, and the 5G is going to be all over the place.
Yeah, absolutely, Don. CCI, once again, Crown Castle International, should be on your watch list, creating 52-week highs again here today. All right, SBAC. Don, one of my favorites, no doubt. Let me say this, Don. This stock is up $15 since we spoke about it last. And then when we spoke about it last, Don, on the last edition of Traders Nation, it was up $10. Do the math. That's $25. That's right, Don. This is amazing, isn't it? And hopefully folks are paying attention. Look at the beautiful looking chart on this. This is Don, this is the kind of chart that you can take home to Mom, and she would be totally happy with it.
Well, on these tower companies, look, stocks go up, stocks go down. But in this market that we're in right now, fundamentals are key. These stocks, they get a little volatile from time to time. But these are basic core businesses. And long-term, these are businesses that are not going away.
Yeah. Without a doubt. SBAC, Sam Bravo Alpha Charlie, currently at $235 a share. About 141,000 shares exchanging hands here today. Nonetheless, this one, creating another 52-week high. Don, let's go on to some of our other stocks here on our list. DLR, Digital Realty Trust, outside the tower area, Don. Currently trading at $124.82. Up $9. Look at the charts on this. Blew through that resistance at 123, unfazed by that recent dividend of $1.08 on 6/13. Don, your thoughts of Digital Realty Trust?
Well, DLR, they've been trading publicly since 2004.
Yeah.
This is a strong company. It was a private firm many years ago, and now here we are. They have about 200 data centers with about 35 million square feet around the world. And this is another business. This is a core business, these data storage companies, where all the big players, from Microsoft to Amazon to other telecom companies, store their data. And these are the companies that, in some instances, they can't get these data centers up fast enough.
That's right, Don. So I'm hoping that folks will recognize a trend that's going on here of our stocks that we're discussing. We're discussing about needs of folks now, domestically, internationally. Certainly the cell towers carrying that 5G, then tomorrow's technology is here and they're rolling that out. And data storage. Don, you can't have enough data storage. I don't know about you, Don, but I have a backup of my system, and then I have a backup of my backup. I have got multiple redundancies just in case one fails. You can't have enough storage, Don.
Right. Well, that is correct. And and of course, there's other applications coming on all the time, and so as a result, every time you click on a product over at Amazon, that data is being stored out there in the cloud. And of course, Amazon goes back and retrieves that data.
Sure.
And they're one of the big clients of all these data center companies on a worldwide basis. The next one we're going to cover here today, I guess, on our list is Core.
It is.
COR. Okay, well, here it is.
Yeah.
This one is just another one that is just not far off its 52-week high. Another one that's putting in a decent day here today.
Yeah, Core. That's right. CoreSite Really Corp. Currently trading at $119.19 here today. 23,000 shares exchanging hands. It's not huge volume, but nonetheless, that's about what this stock does, anyways. At this current time of the trading session, the average volume on a full day, is about 352. So we'll see. Up $4 since we spoke about last. I'm liking it, Don. Just let everyone know you're going to find some resistance at a $120 mark. Let's bring the charts up and show them that. Right there at that 120 is where you're going to find resistance. Dividend coming up on this one, 627. Towards the end of the month, of $1.22 a share, 122 a share. Don, CoreSite.
So on Core, by the way, this is the smallest of the batch because look, the big gun in the business is EQIX Equinix, and we just talked about DLR, and then along comes Core, much smaller than Equinox and Digital Realty, with a market cap of only about $5.3 billion. But this is another one of the companies that spun out of the telecom hotels from the old days, and here it is trading years later, paying a dividend. CoreSite Realty, one you want to keep an eye on. All
right. And we have one more, but we're going to get to that after this interview that's coming up with John Grace. You're not going to want to miss that last stock that's on our list that's going to wrap this all up for everyone to hear and see. All right. Coming up next is John Grace. We're going to be talking about the Fed. They're holding rates right here. What does that mean for you? The rest of it's down the road. Stay tuned. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again John Grace, founder and president of Investors Advantage Corp. John, welcome back to Traders Nation. How are you today?
I'm good, Kurt. Good to be back with you again.
Always a pleasure, John. Hey, listen, so the Fed, they're going to be holding rates right here, John. At least steady for now, right? But certainly, they're keeping the door open for possible future cuts, aren't they?
Oh, absolutely. They've got 4 more formal opportunities this year, so I didn't expect, you can always be surprised, right? Who knows who's going to be right until after it happens, but I would have been surprised had we seen a rate cut this soon. I think they're coming. Yeah. I think there will be several of them, and I don't think it has as much to do with the administration as it has to do with the Fed's intention and certainly their format of looking at things independently.
Sure. It's kind of hard to read the Fed, isn't it, when they have their meetings? You used to be able to look at Greenspan shoes and kind of have a good idea, right? What the outcome was going to come. Everyone's like looking at Greenspan shoes and like, okay, all right, we're okay. And then, oh, God, look what he's wearing. Maybe not so, but it's kind of hard to read the Fed anymore, isn't it?
Well, I think it should be, but I also submit that they're in a difficult place. On the one hand, these are people who work for the government, and when you work for the government, if I worked for the government, I'd have to be saying that everything's fine. Sure. So that's why I say we need to look for other sources, folks that aren't associated, for example, with underwriting stock, and those who are not part of the administration, to get a sense for what really is around the curve, as opposed to thinking we're going to get the straight and narrow from the people who absolutely have an agenda.
Right. So they're even as careful as their language in what their minutes say, isn't it? For instance, they dropped the word patient, describing their approach to policy. Can we read on that at all, or what's in there?
I think that's a sign that lower rates are in the cards. That there needs to be some action taken, as opposed to just kind of watching and wondering to see whether or not we're going to make a move. Now, I will say that I think those moves will occur, and yet because the overall economy, and on a global basis, is slowing, they may have little to no effect. Let's just look at Japan, where they've been negative for off and on for I don't know how long, and notice how there has not been any real growth to their GDP for years.
Yeah, exactly. So with the Feds leaving rates as they are, does that kind of set up maybe a confrontation with President Trump? As you know, he certainly would like to see those rates cut, but he's kind of poised on the sideline too, knowing that there's more potential possibilities down the road. So I don't know. Some are talking, well, this is setting up a confrontation. Others are saying, well, maybe not so just yet. Just hold on. What are your thoughts?
Well, it could be, but I look, people, you're either a president hater or a president lover. Well, how can you? Why not just be an observer of things? Okay, I don't like the label. So, I mean, what I notice is that my dear fellow Gemini, Donald John Trump, you know, he likes taking care of himself and his friends, and I understand that, and he likes telling the public that he's taking care of them. Only when I talk to folks like David Stockman, by the way, he was OMB director under Reagan, right? Served in politics as a Republican. He sums it up like this: the top 1% since 1989 have gotten $21 trillion richer. The bottom 50% have gotten $900 billion poorer. And by the way, he says that's the legacy of Alan Greenspan and monetary central planning. So we're all trying to say, hey, don't pay attention to the man behind the curtain. Just move along. Everything's fine. And when we really need to look at, as I say, is let's get other information, other sources to get a sense for are things really growing, or are we just trying to say they're growing? I submit that a better source tends to be the International Monetary Foundation Fund, and notice that every quarter they keep reducing their expectations as to growth. Slower growth is better than no growth, but it's continuing to slow worldwide, and it's easy for us to say we're the best and the brightest. I would say we're the best house in a bad neighborhood, and all the houses are attached. Okay, we're all in the same street, so we're in line.
Nice. So let's talk about all the members on the Fed, certainly, because my point is that you got 8 members that favor a cut this year, while the same number of votes favor the status quo, and I don't, and then there's one that wants a rate hike. Does this kind of indicate that maybe there's a divide in the Federal Reserve? Your thoughts there?
Well, I don't know that I'd call it a divide. It sounds like it might be a healthy conversation. When everybody decides that, this is the best of times or everything's just fine, that's when I get more worried. I actually prefer to see some option or, some opposite thinking from the standpoint of, well, this is how I think, well, this is how we think or you think. Well, okay, so what are we going to do from here? I think that's a healthy conversation. I wish we did more of that.
Yeah, I agree. Maybe, I wonder if as a nation, if we could follow the example of the Fed and just kind of like say, we'd like to hear all points of view. Certainly wouldn't that be more healthier as a society if we could just follow that example?
Oh, heck yes. I mean, we're all human. We really all want the same thing. Let's come from that perspective and identify and prioritize what's important to us and have conversations as opposed to, well, I don't like you anymore, so I'm just going to throw you and everybody who looks like you under the bus.
Right. So we got four chances between now and the end of the year. Certainly, how's that going to have an effect on the economy, if at all, right?
Yeah. Well, I mean, like I say, they're going to use all the bullets in their chamber. It's just that this is probably the only bullet that they really have, and I am not sure that it's going to have the kind of impact that people are hoping that it does to further goose the economy, to further encourage individuals, companies, and governments. We're all doing the same thing, Kurt, at the same time, where debt levels are higher than they've ever been, and of course we recognize that in 2008 we didn't see that buzz coming, right? Credit default swaps, what the heck is that? And little did we know the world as we knew it almost changed overnight. So I'm submitting that, interest rates are good. They're lower when it's nice when it's good, but sometimes, when we go out for credit, where it's not the best thing we should be doing, but it's easy to do, and that's what a lot of this growth has been around credit, both for the real estate market and the stock market, along with the corporate buybacks that I submit has been really the energy, if you will, behind these gains.
Yeah. So what about the argument of raising the rates to get it back up so at least the Fed has some maneuverability in the tools that they have as far as the economy is concerned? Dropping it down to 0% or down to these rates that we're seeing historically low. and they remain low. I mean, a decade ago, we were like, you know, you're going to looking to refinance your home, you better do it now because these rates aren't going to stay here forever. Boy, were we wrong.
Yeah.
Right?
Yeah.
Because it's like, get it while the getting's good. But the getting kept getting good, and it's still here. So what about raising it up and putting tools back into the Fed?
Well, let's talk about that for a minute, because, see, here's the thing. Back in the early 80s, when boomers were standing in line around the country to buy a house, or whatever the price might be, interest rates might have been 12%, got as high as 18%, right? Yeah. But let's just recognize it wasn't interest rates that were the primary driver, and this is the thing that I think is so fascinating. We're always looking at these little, ornaments that get our attention. We get all excited.
Right.
That's not the driver. It's people. It's 76 million people coming into the equation with an education, a little bit of money, and a desire to buy a house. So let's just notice, you could not have told any boomer that 3-4% housing price money, loan money, was in their future. Nobody would have believed that. They would have asked you to step away from the conversation because clearly you are out of your mind. So let's just notice that's the best environment you never imagined, and yet nobody's really standing in line anymore to buy a house like they did. 76 million people are now 55 to 73. They're done with for the most part. They bought the first house at 31, the biggest house at 41. They sell their houses typically, according to the Census Bureau, around 79. So as I say, we can kind of make these things kind of glitter.
We're out of time.
They don't really drive us.
We're out of time. Stay tuned.
All right.
Welcome back. You are tuned in to Traders Nation. Boy, Don, we came right up to that hard break. Head on over to John's site, ybpoor.com, ybpoor.com. John Grace, founder and president of Investors Advantage Corp. Certainly you can Google that too. Hey, Don, also want to let everyone know you can check out the podcast of Traders Nation. We're over there on iTunes, Don, also Spotify, plus tradersnation.com, YouTube channel, plus all the syndication of locations that carry Traders Nation throughout the United States and worldwide, really, Don. I think we're picked up in like 24 countries worldwide. The primaries.
And don't forget the social media too. We're on Twitter, we're on Facebook, Instagram, and so you can be in touch with us over there.
That's right. We keep it updated for the most part, Don, and we throw content up there. We throw stuff up there just out of the blue, real random stuff sometimes. And you know what? You never know what you're going to get over there, right, Don?
And all we have to do here is look at the towers and these data center companies, and they're rocking and rolling.
So we promised before we went to the commercial break in the interview, that we had one more stock left. It's QTS, QTS Realty Trust, $46.60, Don, up $2, trading in this beautiful channel. Come up to resistance to the top. Check it out here today. All right.
Yep.
Don, do you own anything we talked about?
No, and all these stocks are consolidating at their 52-week highs.
Yeah, and they'll continue to consolidate. We'll see what happens here. Will they continue to march north? I don't know. I don't own anything either.